Ladies and gentlemen, thank you for joining us virtually for today's annual general meeting. My name is Penny Freer, your chairman. My co-directors, James Agnew, Pam Garside and Ian Spence, along with Emil Gigov, a partner of Albion Capital, have joined via the video link. Joining me here at Albion's offices is Will Fraser-Allen, managing partner of Albion. Hopefully you should be able to see them all as panelists alongside my picture on the screen. I would like to use this occasion on behalf of the directors to thank Richard Huntingford, our previous chairman, who stepped down from the board on 30th of September this year after almost 8 years in office, including 6 years as chairman. Throughout his tenure, he had tirelessly given his time to shareholder needs, and he leaves the company in a good position. The board wishes him continued success, and given that he is a shareholder, I know he will be watching with interest as to how the company progresses over the years ahead. On a separate matter, I'd like to make shareholders aware of potential scams that are targeting our shareholders. These fraudulent activities are increasingly sophisticated, often by a phone call or an email, which normally originates from outside of the UK. Do note that the company will never pass your personal details on to a third party. And if you are worried, Albion Capital maintains a page on its website that offers fraud advice. Moving on. The quorum required for the meeting is 2 members, entitled to vote in person or by proxy. I can confirm that this has been met, and therefore I declare the meeting open. I'm sure you will appreciate that this meeting is being held under unfamiliar circumstances due to the ongoing coronavirus pandemic, and in particular the government measures relating to social distancing and public gatherings. Today's meeting is being broadcast over the internet via a live stream service, which has been set up to give shareholders the opportunity to take some part in the proceedings. I trust you're all able to watch the entire presentation without connection issues. However, if you do have any problems, this presentation is also being recorded and will be uploaded to the Albion Capital website, so you can watch it at your leisure. I'm sorry that the meeting can't be held from our usual venue, but both the safety of our shareholders and keeping in line with government guidelines were key factors that were taken into consideration when the board decided upon the approach for this meeting. Whilst the company's current articles of association don't provide for the general meeting to be held by using video and audio functionality, the government has brought in temporary legislation to enable companies to hold meetings virtually and to allow shareholders to participate. You will note from Resolution 13 that the board is proposing to change the articles of association to allow for virtual and hybrid meetings to be held in the future, which will enable continued shareholder engagement. Interestingly, it appears that many more shareholders are participating in this meeting than has historically been the case with physical meetings. And I hope that that will be something that will continue. I'd like to thank shareholders for sending their questions through the chairman email address. A comprehensive question and answer schedule will be posted on the Albion website after the AGM. Additionally, the board has decided to allow live questions to be submitted by shareholders during the meeting. If you have any questions, please use the Zoom Q&A function to send those through, and we will try to deal with them at the relevant stage of the meeting. Before we start the formal agenda, there will be a presentation from Emil Gigov of Albion Capital. Emil.
Thank you, Penny. I hope that everybody can hear me. I have been doing this presentation to the Crown Place shareholders for more than 10 years now, and I'm always really pleased to see shareholders in person and see a lot of familiar faces. Unfortunately, this year we cannot do that. On the flip side of that, we have many more people joining us. So for those I haven't met before, I am a partner at Albion. I've been in the business for over 20 years now. I spend the majority of my time with my team of investment professionals making, managing, and exiting investments. We have a team of 18 investors at Albion, which is one of the biggest teams in the VCT sector and probably one of the biggest investment teams in venture capital in the UK altogether. We are very proud that we've assembled a very good team, and hopefully this will serve the shareholders for the future. Next slide, please. Today, I'd like to cover this agenda, starting with financial highlights, talking briefly about the COVID impact on the portfolio. Moving on to track record and then the results for the year to 30th of June 2020. As always, I will dedicate more time on the investment portfolio, talking about the portfolio composition as well as realizations and investments. And I will conclude talking about the new dividend policy and our view of the prospects for the company. Before we go to the agenda, though, I'd like to make a couple of important notices, one of which Penny touched on recently. Next slide, please. A fraud warning. We are seeing an increasing number of fraud attempts, some of them targeted at our shareholders. And I couldn't emphasize more the need to actually be vigilant and not to be fooled by what are typically psychological confidence type tricks that are being played on shareholders. Those of you who listened to our shareholder seminar last week would have heard a talk by one of the preeminent anti-fraud experts. It's really important that you don't take any quick action if you're approached. Do give yourself time to think about it, take advice, speak to Albion if you are uncertain about any action that you've been asked to take. Next slide, please. We'd like to emphasize the importance of electronic communications with shareholders. There are a number of very strong reasons for asking shareholders to opt in for electronic communications. In terms of security, speed, efficiency, it is much more convenient to communicate with shareholders in this way. It is much more secure as well. And to give people some additional incentive to do that, we have pledged to donate £1 for every shareholder who opts for electronic communications. There is a step-by-step guide on the Albion website. It is a very easy process to register for that. We'd really like you to do it. Specifically, those who would like to participate in the next Albion fundraising, on which more later, we have now offered a facility for online applications as well, and we urge you to use that facility for your application to new subscriptions. Now let's move to the agenda. Next slide, please. To start with the financial highlights for the year to 30th of June 2020, the net asset value per share was 33.14 pence. This was a reduction in total return per share of 0.21 pence. This was predominantly, if not exclusively, due to the COVID pandemic. This reduction is equivalent to 0.6% of loss for the year. Nevertheless, we maintained the dividend of 2 pence per share, which was equivalent to 6.5% tax-free on the share price at the beginning of the year. Now, in the circumstances and given the effect of COVID on the wider economy, we think that this is a reasonable outcome. And as I will come to mention later on, we have just announced the results for the 3 months to September 2020, which show a net profit for the 3 months of 0.2 pence, and that kind of compensates for the loss of the previous year. Next slide, please. We are often asked by shareholders about the impact of COVID-19 on the portfolio. There are a number of companies that were affected, not very many, fortunately, in the portfolio, and those are the companies that typically sell directly to their customer base. So to outline the 2 or 3 most affected, Murata Medical and Dices, for example, sell directly to hospitals through a direct sales channels where they visit hospitals to make sales and demonstrate the product. During COVID-19, this has been increasingly difficult, not just because hospital has different priorities, but also because there's restricted access to their facilities. So these 2 companies are having a slightly more difficult time to progress their businesses in the current climate. Ziff Channel Solutions is another company that sells on a face-to-face basis, and also Bedstead, our wedding venue, has been closed for a big part of this last 9 months or so. Against this, a number of companies have actually done very, very well as their customers are looking for to rapidly transition into a digital business model. So those companies that work in the digital health space and some that work in enterprise software technologies have actually seen their businesses accelerate. To give you a few names by way of an example, Provica, Aridia, Umotiv, Oviva, Helios in the healthcare space have all accelerated in the last 3 to 6 months, and so have Quantexa and Phrasee in the software sector. Now, the COVID impact has been lessened by the fact that circa 36% of the portfolio as of the year end was in cash. And this was a result of some very strong exits in the first half of the financial year, which I'll come to talk about in a few slides' time. Also, approximately 11% of the investment portfolio was in renewable assets, which were less affected by the COVID pandemic. And as I mentioned earlier, just a second ago, the results to 30th of September 2020 have just been announced, showing a 2.5p profit, which offsets the losses for the previous year. Next slide, please. I'll now touch briefly on the track record of the company over the 5 and 10 period, and since we started managing the business in 2005. Next slide, please. So many of you who are long-term shareholders will remember that Albion took over the management of Crown Place VCT in 2005. It's been 15 years now that we've managed the company, and during that period we've put forward a strong tax dividend distribution to investors. We've distributed 34.8 pence of dividends. In the early years, some of this dividend distribution was out of capital. Therefore, the NAV has gone down since we took over. Nevertheless, in the last 5 years, as I'll show you in a second, NAV has been increasing. So the total return of 24.5p equates to approximately a 4% annual compound return since 2005. Of course, this period of 15 years includes not only the recent pandemic, but also the financial crisis 10 years ago, which many of you still remember, I hope, and where valuations took a significant dip before recovering again. Next slide, please. Over the last 5 years, we have seen some very strong returns, especially the 3 years prior to the year under review, where double-digit returns were achieved by way of total return. On average, and this is just a simple average, over the 5-year period, the annual return was 8.1 pence, or in total 8.1%, or in total 40.7% over the 5-year period. 12.6 pence of total return was delivered, and this enabled the payment of 10.5 pence of dividends. So as you can see, the dividends has more than been covered in the 5-year period, and the NAV was rising up until this point, up until this year, was rising steadily. Next slide, please. To look at this slightly differently, over the 5-year period, a shareholder who invested £100 at the beginning and reinvested their dividends in the dividend reinvestment scheme would currently have value of £147 or 8% per annum compound return. Next slide, please. Looking at the 10-year track record, and this is the final slide that deals with the track record. We have used the FTSE All-Share Index as the agreed benchmark for the company. As you can see on this chart, up until the 30th of June, the company slightly outperformed the index. Of course, public markets have recovered since that date, but nevertheless, you can see that the company is performing in line with the index, but with less volatility. Next slide, please. I will now briefly talk you through the results for the year to 30th of June 2020. Next slide. In the income statement, the key areas to highlight are on the first line, you will see the gains and losses on investments. As this shows, the portfolio generated, it was practically flat for the year, generated a negligible loss of £21,000. This compares to nearly 6.5 million of gains in the previous year. Investment income was broadly in line with the previous year, slightly reduced due to the exit of 2 income-generating investments during the period, while investment management fees and other expenses remained broadly the same as in previous years. So overall, the company generated a small loss of 0.2 pence per share for the period. Next slide, please. On the balance sheet, the key movements to highlight are the reduction of the overall size of the investment portfolio, which was a result of the exits I mentioned, and I'll speak to in a few minutes in more detail. And at the same time, the equivalent increase in cash and cash equivalents, again, as a result of the exits. What this masks, of course, is a very strong reinvestment activity. We managed to produce exits of 12.8 million, but reinvested 4.2 million of that. Of course, following the year end, there was also the payment of a special dividend to shareholders, and this reduced cash balances by an additional 3.3 million pounds net. Next slide, please. Now, I mentioned that the portfolio was overall flat, but this masks a few significant increases in valuations and some reductions in valuations as well. On this slide, I'd like to highlight the key ones. Quantexa was a very strong performer, and the valuation increased as a result of a Series C round, which was led early in the year by an independent investor from the United States called Evolution Equity Partners, with further participation from the British Patient Capital and ABN AMRO Ventures. The company raised an additional 65 million as a result of this round to continue to scale very rapidly, giving it total funds raised to date of 90 million plus. Provica was another very strong performer that continues to trade very well in the current climate. And ELE Advanced Technologies, which is a company we've held in the portfolio for a long time, was exited at the beginning of the financial year at an uplift to the existing previous valuation. Against this, ZIF Channel Solution is trading below expectations, and so are Dices and Mirada, for the reasons I mentioned, because of their inability to sell directly to hospitals in the current climate. We've also reduced marginally the valuations of the care homes just to take a more cautious approach given the COVID pandemic. Next slide, please. Now, I'll talk a little bit more about the investment portfolio and its composition. Next slide, please. This slide shows you the diversification of the portfolio across different sectors. The portfolio has 55 unquoted investments in it. This figure has been broadly the same for the last few years. Somewhere between 50 and 60 is a typical kind of composition of the portfolio. You will see that at the year end, there was a significant amount of cash, which represented approximately 36% of NAV. In addition to that, 11% was in renewable energy investments, which are broadly stable in the current climate. The most significant change in the sector allocations is the exit from one of our educational assets and the reinvestment of these funds and additional funds being invested in the software space and also in healthcare technology. Overall, as you can see in this chart, the healthcare sector split between healthcare technology and healthcare services represents approximately 25% of the portfolio. As you also note, there's very low exposure to discretionary consumer sectors. This is part of our investment strategy. We don't like to be heavily exposed to consumer sectors, specifically those that are discretionary. Looking forward, we believe that there will be continued growth in the technology sectors of the portfolio, specifically software and healthcare technologies. And over time, we expect the asset-based investments in healthcare and education to be reduced as those companies are sold. But we don't see this as happening immediately. We see this as a gradual process that may take a few years to accomplish. Next slide, please. In addition to sector diversification, we are also looking to diversify the portfolio in terms of stage of investment. On the left-hand side, On your slide, on your screen, you will see a chart showing the stage of investment of the companies in the portfolio. You will note that only 10% of the portfolio is in what we call an early stage, and we define this by companies with revenues of less than £1 million. The majority of the portfolio is in companies of showing revenues of between 1 and 5 million, that is in the growth stage, and quite a sizable part of it is also in scale-up companies that have in excess of 5 million of revenues and continue to grow fast, but are much more sizable. As a proxy for the stage of investment, we also look at the number of employees each company has, and you will note that only a small percentage, 4%, have less than 20 employees, and the majority have in excess of 50 employees, with many having more than 100 employees. Next slide, please. I mentioned realizations. We generated 12.8 million of returns to the company from principally 4 key realizations. Yearly Advanced Technologies, a company that's been held in the portfolio for some time, was sold at the beginning of the financial year and delivered 5 million in terms of cash, which was a return of just under 5 times. The sale of Rotherhouse Twickenham took place in the autumn of last year. This was our first school, which was mature, had been mature for several years, and the decision was taken that it's the right time to exit to a strategic investor at a significant multiple to profits. The investment delivered 4 million back to shareholders, achieving a return of 3.75 times. The sale of Bradwind Pubs was also a strategic sale, which delivered 1.2 million back, or 1.85 times return. In hindsight, it was a very timely sale, given what's happened to the pub and leisure sector. Last but not least, Process System Enterprise, which was a small investment for this company, delivered 1.4 million, which was represented 10 times cost. And I highlight this because it is the second time in recent years that we've achieved a 10 times return, with Grape Shot exiting in 2018 at a similar return of 10 times cost. Next slide, please. Before I move to describe the new investments we've made, I just wanted to remind shareholders of the investment strategy and just talk a little bit in a little bit more detail about it. So Albion invests in typically at the Series A stage. And what do we mean by investing in Series A? Series A companies would have a minimum of £1 million recurring revenues, usually somewhere in the area of 2 to 3. They'll be growing fast at 50 to 100% per annum. Critically, they would have achieved what we call product market fit, i.e., they would be making repeated sales to customers who are showing strong demand of their product. The principal reason these companies are looking for funding is to scale up commercially rather than develop a technology. So while technology never stops developing, the funding is usually applied to create more sales resources and better go-to-market strategies. We very selectively invest in the seed stage and principally in the healthcare space, but also occasionally in software. When we invest in the seed stage, we look for big market opportunities, strong management teams, and some uniqueness in the technology. Those companies are still commercially very young, and therefore our investment size is typically much smaller than at the Series A level. At Series B, we typically invest when we follow on from previous rounds. Occasionally, we would invest in Series B new companies as a part of a bigger syndicate of investors. We are backing long-term trends, and by this, we typically mean sectors such as enterprise software, and more specifically, cybersecurity, digital marketing, data analytics, and fintech, healthcare technologies, specifically digital health, and specialist pharma and diagnostic devices, to name but a few subsectors. But opportunistically, where we see strong technologies and strong market opportunities, we also back other software type and technology type investments, such as in speech to data, in sensors, and in process automation. Our focus is firmly on business-to-business software rather than consumer-facing software, and we also invest in technology-enabled services. We have low exposure to consumer-facing businesses. Next slide, please. During the year, the company invested 4.2 million compared to 3.5 million in the previous year. So we've stepped up our investment activity and continues to see strong opportunities for investment. We invested just under 3 million in new companies, and I'll come to talk about them in a second. And we invested 1.3 million in follow-on investments. Next slide, please. The 5 new companies that were invested in during the year include Considerus, which is a software provider to the marine and transport insurance industries. Elliptic, which is an anti-money laundering services business backed by strong technology, providing services to digital asset institutions. So in other words, these are institutions that play in the Bitcoin market typically, and Elliptic provides them with the ability to satisfy anti-money laundering regulations. Transfig is a company that provides connectivity between market participants and the market venues, i.e. providing the infrastructure and the plumbing, enabling market participants to participate in trading activities in a much more simpler, more cost-effective way, enabling other technologies to be built on top of it. Speechmatics is a deep tech company which has developed a technology platform to translate speech into data and therefore enable the analysis of that speech and that data that results from it. Whereas Credit Kudos is a new and innovative challenger credit bureau, helping lenders optimize their affordability and risk assessments. So they would compete with people like Established like Experian, but use a number of additional knowledge streams to provide better outcomes for their clients. Next slide, please. Since the year end, we've made 2 new investments that we can speak of. We've made another one that we cannot at the moment because it hasn't been announced. Seldon is a very interesting technology company which provides a platform that enables machine learning algorithms to be deployed in production very quickly. It is seeing very rapid growth because of its very innovative technology. WeGift is a company that has digitized the gift card space. These are gift card programs working together with big brands to incentivize employees of big corporates, to incentivize customers, or to incentivize channel partners. Next slide, please. We've won a number of awards. Most recently, last week, we won the Investment Week Investment Company of the Year Award 2020 for the Generous VCT section, where Albion Development VCT was the winner. As you will note, of the 6 shortlisted candidates, 4 are VCTs in the Albion stable, which we're very pleased about. We were also shortlisted for the Group of the Year. We didn't win that award, unfortunately, but we were very pleased to be shortlisted alongside some of the giants of the asset management industry, such as Aberdeen Standard, JP Morgan, and BlackRock. Next slide, please. I'll briefly mention dividends. Next slide. Shareholders would have received a 2 pence per share dividend on the 30th of October, which is a special dividend reflecting the strong exits during the year. A new dividend policy has been adopted by the company, which moves it to a variable dividend. The reason for this is that, as I mentioned earlier, we expect the portfolio to transition increasingly into younger technology companies in the growth side of the portfolio. These companies, unlike some of the income-generating investments we've had to date, are by nature more volatile, and that volatility means that the NAV of the company can become more volatile as well. A dividend which is based on a variable basis, we will enable shareholders to firstly be rewarded more rapidly when NAV increases, but also will prevent unsustainably high dividends being paid if NAV reduces. Therefore, the policy is to have a targeted annual dividend of around 5 pence, 5%. That dividend of 5% will be based on 2 dividends, each being approximately 2.5% of prevailing NAV. The first dividend to be paid of 0.83 pence per share is to be paid on the 30th of November 2020. Next slide, please. We'll now conclude talking about the prospects of the company. Next slide, please. As I hope I've been able to demonstrate to you, the company has a portfolio which is well diversified and focused on long-term growth trends across sectors such as healthcare, services and technologies, software technologies, digital transformation, and including the sustainable energy generating assets. There's low exposure to discretionary consumer-facing sectors. Therefore, the immediate impact of COVID-19 on the portfolio is now better understood and to a large extent, we believe, reflected in the valuations of the portfolio. A number of the companies are performing ahead of their projections and ahead of their budgets in the current climate. And we're very pleased that we have a number of very fast-growing companies in the portfolio. Nevertheless, we think that the long-term economic impact of COVID-19 creates significant uncertainty. So overall, we believe that the company is well positioned as a medium to long-term investment for shareholders. And we've always said to VCT shareholders that a VCT investment is a medium to long-term investment. However, the short-term future, especially given COVID-19, remains very uncertain. Next slide, please. Finally, I'd like to point out to shareholders the intention to raise a new top-up funding across the Albion stable of VCTs. As we announced early in the week, the current intention is to raise 45 million across 5 of the Albion VCTs. As you will see on this table, different funds have elected to target different amounts of fundraising, and Crown Place has elected to look to raise £6 million with an over-allotment facility of £3 million should the board choose to raise that additional funding. A prospectus will be published in early January. We're currently working on it. And shareholders will be able to find it on the website, and also will be able to apply for the share offer on the website. And shareholders are encouraged to submit online application, which will be much easier for them as well as for the Albion team in terms of processing. Well, thank you all for listening, and I'll now pass back to the chair, Penny Freer.
Thanks, Emil. As I indicated earlier, the board would like to use this forum to take some of your questions, and will now endeavour to answer them, also involving members of the Albion team. So first question, actually just finishing off on the fundraise point that you mentioned, Emil. Question is, will the fundraise cover 21-22 as well as the current tax year?
Shall I take this one, Penny?
Yes, I'll leave that to my colleague, Will.
Yeah. So absolutely, as in prior years, we structure it in such a way as shareholders have the option of selecting which tax year they wish to invest in, and that's achieved by having an allotment date immediately before the end of the tax year and immediately after the tax year. So you simply will be, when you fill out your online application, you'll be given the option to select which tax year you wish to participate in, and then it'll happen automatically as soon as we pass the tax year end.
Great, thanks, Will. So basically the fundraise covers both the current year and next year as well. Next question, how competitive is the current market for portfolio investments compared with the last 10 years, and specifically as a result of COVID?
So the market for new investments remains fairly competitive despite COVID. We have seen a large number of funds looking to invest in technology. Not just funds that have had a focused technology investment strategy for some time, but actually new participants coming into this space as well. We're addressing this by redoubling our efforts in the technology investment space to find and get close to and get to know very interesting businesses at the very early stage. As I mentioned earlier, we have 18 investment professionals on our team. The majority of them spend a large number of their time actually talking to interesting new businesses that we'd like to get close to and get to know well ahead of the time when we might be investing into them. So we're building a very important, a very attractive kind of brand in Albion VC, in this space, and we are attracting very good opportunities. As I said earlier during my presentation, our investment rate has increased from previous years as a result of that directly.
Thanks, Emil. Another question. How has coronavirus both provided some new opportunities and ideas, as well as difficulties for some companies? Have there been new opportunities and ideas that have come out of the pandemic?
So coronavirus has accelerated by a number of years the digitalization of a number of sectors of the economy. And we have seen, therefore, the need for digital technologies to support business models increase dramatically, and the adoption of some of these digital technologies to really accelerate over the last 6 months. A number of our companies that provide technologies around security, cybersecurity, have seen the benefit of this, particularly as people work from home increasingly. A number of other companies who participate in the digital marketing space, for example, have seen their business accelerate very rapidly because a lot more companies are now marketing and looking to sell digitally. Those are just two areas that have seen a significant increase in new ideas and new activity. And of course, there is the healthcare technology space, where a lot more healthcare services are being delivered in a digital way, as well as on a system-wide basis. We have seen an increased interest in tools that enable an overview of a healthcare system and the data that runs through it to be achieved through technology. So there's been a number of positives and a number of new opportunities that we see in the marketplace.
Thanks, Emil. We've also had a question about dividends in terms of the 2 dividends that Crown Place pays. They happen on a date in November and also in March. And the question was, why are these dividends 4 months apart and not an equal 6 months apart? Many shareholders who own shares in Crown Place also own shares in other Albion VCTs, and in fact own shares perhaps in all 6. And therefore, one of the things that Albion has strived to achieve is a dividend that covers each month of the year. So if you are one of those shareholders that holds shares in the portfolio of VCTs, then you'll be receiving a dividend payment in each month of the year. So I hope that helps with that question. Next one for Will, I think. What do you think is going to be the likely impact of Brexit on the portfolio?
It's amazing how Brexit as a subject almost completely disappeared off the news agenda, and then now has reappeared quite rightly as the outcome of the negotiations become closer. So I guess we've looked at the portfolio in quite a lot of detail because Brexit has been on the horizon for some time now, trying to understand how that portfolio might be affected. Our broad conclusion is that there will be an economic effect, which will be a general economic effect, and our companies will often be affected as many others. But if we dig into the detail and actually look at the direct exposure of individual companies, our view is that we are less exposed than one might imagine for a number of reasons. Firstly, our businesses are UK businesses. That is what the VCT scheme aims to support. So often they are selling to quite local UK markets. But when they're not selling to UK markets, they are selling to very global markets. And everyone has told us a lot today about how software is a big feature of our investment strategy. And what we find there is that is a very global market. And more importantly, it tends to be markets are often outside Europe. So the US is a huge expansion area, and we often invest behind expansion strategies into the US. So yes, we do have global sales, but the extent of sales into Europe are relatively low, not least of which because language favors a US market where the common language is English, as opposed to 27 different European members. So our conclusion on balance is that we are well placed. There is a risk around the economic side, and that is indeed also goes alongside the COVID risk that we referred to earlier. So on the whole, we feel, you know, we're as well positioned as we can be, but clearly there is uncertainty.
Thanks, Will. And thank you everyone for your questions, and Will and Emma, thank you for your responses. I'll now proceed with the formal business of the AGM. Notice convening the meeting has been in your hands for the statutory period, so with your permission, I will take the notice as read. There have been no questions from shareholders on the AGM resolutions, and therefore I'll proceed. I'd like to point out, as there are only 2 shareholders present in the office, myself and Will Fraser-Allen, these 2 shareholders are the only ones able to vote in person. The rest of the board and any other shareholders will be unable to vote, as they are not at the place of the meeting. However, you will see the proxy votes that we've received displayed on your screen, and these show that the majority of shareholders have voted in favour of the board's proposed resolutions. I do not intend to read out the proxy votes after every resolution, but will show them on the screen as each resolution comes up. First item on the agenda is to receive and adopt the company's accounts for the year ahead, the year ended 30th of June 2020, together with the strategic report and the reports of the directors and auditor. Those in favour? Any against? Thank you. I declare the resolution carried. The next item on the agenda is to approve the directors' remuneration policy. Those in favour? Any against? Thank you. I declare the resolution carried. The next item on the agenda is to approve the directors' remuneration report for the year ended 30th of June 2020. Those in favour? Any against? Thank you. I declare the resolution carried. The next item on the agenda is the election of Ian Spence as a director of the company, and I have pleasure in proposing Ian for election. Those in favour? Any against? Thank you. I declare the resolution carried. The next item on the agenda is the re-election of James Agnew as a director of the company, and I have pleasure in proposing James for re-election. Those in favour? Any against? Thank you. I declare the resolution carried. The next resolution will be proposed by James Agnew.
Thank you, Penny. The next item on the agenda is the re-election of Penny Freer as a director of the company, and I have pleasure in proposing Penny for re-election. Those in favour? Those against? Thank you. I declare the resolution carried. Back to the chair of the meeting.
Thank you, James. The next item on the agenda is the re-election of Pam Garside as director of the company, and I have pleasure in proposing Pam for re-election. Those in favour? Any against? Thank you. I declare the resolution carried. I now propose the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. Those in favour? Any against? Thank you. I declare the resolution carried. Item 9, the next item on the agenda is to authorise the directors to agree the auditor's remuneration. Those in favour? Any against? Thank you. I declare the resolution carried. The next item is to consider to allow the directors to allot shares. Those in favour? Any against? Thank you. I declare the resolution carried. The next item to be considered as a special resolution that the directors be empowered to disapply preemption rights. Those in favour? Any against? Thank you. I declare the resolution carried. The next item, which is again being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Any against? Thank you. I declare the resolution carried. The last item, which I mentioned earlier, and again is being proposed as a special resolution, is to amend the company's Articles of Association to enable it to hold general meetings either wholly or partly by electronic means. Those in favour? Any against? Thank you. I declare the resolution carried. Thank you. That concludes the formal business of the annual general meeting. Thank you once again to all shareholders who have joined this live streaming of the AGM. As noted earlier, the board welcomes any feedback you may have, and you can do so by sending an email to crownchair@albion.capital. And for those of you who are interested in seeing the full list of questions and their corresponding answers, these should be available within 24 hours on the Albion Capital website. I now close the meeting, and on behalf of the board, I do hope you all stay safe and well. Thank you.